Hey guys, this is Mubashir and today we are going to analyze the Praj Industries. Basically, we are going to analyze its fundamentals and technicals too. So let's start the video with the technical part. Praj Industries. Okay, here it is. And let's see. So let's go with the weekly chart. It will be the best option for us. Okay, automatic advantage. Look at this. Maybe you guys can observe that how initially this stock has given the returns. I think we can go with the 1 month chart too, right? Here it is. This is a basic explanation. Initially, after the launch of the IPO, you can see how much bad performance it has given, but afterwards it has dropped down by the around 76% approx. Then it went to the consolidation phase, we can say. Then again tried to do well here, but again then crashed around again around 65%. Okay, it then went up by the around from it is this low around you can see 2000%. So that's excellent. I mean, and from that level it has went down by the around 65%. If you see the some pattern here, you can come to know that here it is the stock price was went down by the around 70%. Then here it is around 65%. Then at this level it is again around 65%. It's kind of we can say some cycle which is happening here. And also there is a important support here. I mean, if you see, I mean, if you see this level, this consolidation, okay, this is the last the stock is now at the support level, very important support level we can say. And also if we consider the previous cycle, it is also very important level we can say that, right? And also if we see the I think if it is going to be a engulfing candle, I think we can expect a very good movement upwards, right? So let's see what's going to happen. Or let's move it down to this level. I think okay, with the west. Okay, let's see what's happening next. So let's go with the technicals part. Oh, sorry, fundamentals part. Praj Industries. Okay, so let's know about the what's the company actually do. So Praj Industries Limited, founded in 1983, is a leading biotechnology and engineering company, right? Globally, it offers sustainable solution in bioenergy, water purification process equipment, beverage, and water waste water treatment companies focus on the. So let's go with the products and portfolio first. It is product portfolio is diversified in the bioenergy, Praj in Praj high purity system, critical process equipment, and skids waste water treatment and beverage. I think they are mainly related to the process, right? If you observe their overall working, you can come to know that they are mainly involved in the like intermediary space, or sorry, that is processing the like water waste and purification like that. So yeah, so let's go with the it is ratios first. So market cap is only 6,000 crores. So it is a kind of a small cap company, and stock P is 58. That is too much high, and industry P is 33. So overvalued it looks like overvalued. Let's see if it is EPS justified it or not. Return on capital employed and return on equity. So kind of low debt you can see that debt equity. So promoter holding is 32% only. I don't prefer the company if you have a low promoter holding. Anyways, interest coverage ratio is also not less. I mean, it is high, but as per the debt equity, we I think they are not able to make that much money, right? And EPS growth for the 5 years is 23%. EPS growth for the, that's great. I mean, EPS growth for the 10 is also excellent. I mean, we can say for this kind of company, 10% is kind of good numbers, right? Quick ratio is also good. Current ratio also good. More than one. Current price and the book value, it is around 4.27, 4.72. Price to book value is 4.72. And sales growth for the, okay, that's good. That's good. Average dividend payout. So basically, they are paying dividends because I think they are not able to make their prices go up. I mean, you can see that there is no appreciation in the stock price. I think that's the reason they are paying high dividends. So in order to attract investors, I think dividend yield is still 1.7, and because their stock price is too much higher, right? You can see that it is EBITDA is also high. Tag ratio, look at this. I mean, it is not justifying their valuation. I mean, the PAG ratio is too much high. It should be at least 1.5 and 1.7. I can say that as per this, as per the company's overall process working, they should maintain at least 1.5, 1.7. But they are not able to hold that level. I mean, even thought the 1.5 and 1.7 also not good thing, but yeah, we are just analyzing the small cap companies, so we have to be like little bit aggressive, right, for that. Okay, okay, let's go with the trend of EPS and PE. Let's see what they are going. If you want to talk about 2014, they were making around they were having around P of 22 and EPS of 3 only. And in the 25, they were having 25 of EP and EPS of 3.5. So let's go with the 2020 time, we can say that. So in 2020, they were having a P of only 12 and the EPS of 14. Sorry, 4. And 22, oh sorry, 23, they were having a P of 36 and the EPS of 10. So let's see. And the 25, now they have a P of around 59 and EPS of 5 only. So as per the trend analysis, I think it is the stock is over, trading above their average P and EPS. So I think it is not a good valuation. It is trading at their premium. Okay. So let's just quickly compare with this industry peers, market cap quarterly sales variance. Look at this, it is low as compared to its peers. PAG ratio is also too much high, and EPS for the 12 month is also low. Sales variance for the 5 years is quite acceptable. Profit variance also acceptable. Interest coverage ratio acceptable. Current market price to the book value is also good. EBITDA is, I can say that over if you consider the overall valuation, it is too much high. Current market price to the sales value is quite acceptable. Return on equity and return on capital employed is also good. There is no pledge. Debt to equity ratio is also good. P ratio is also high if we compare with it is. I mean, if we go with it is overall valuation, P is high. Even though the if we compare with it is peers, it is trading at the good value, but still it is not bad. So let's go with the quarterly results. Here it is. Look at these quarterly results. Year on year sales growth from 800 around 900 crores to the 850 approx. So I think they are not growing well. Look at these numbers. And profit from 68 to 56. Look at this. Oh, I think their overall profit margin has also been reduced. Look at this, from 8% to 7% only. Income, other income is also, it is not, I think it is not a good thing to watch now. I mean, we have to look at only operating that they are generating from by their own self, which is their own business. Okay, depreciation is also increasing over the years. I mean, it is because of they are acquiring more of assets. So overall net profit is 48 and it is down to the around 20. So it is a not good sign for the company. Let's go with the profit and loss statement. So it will be the more best option for us. Within 10 years, so they have converted from the 900, we can say 1000 crore to the 300 and 200, 3200 crores. So yeah, it is around more than 220% of return. Sorry, increase in this sales. So it is a good sign. Within 10 years, it is a we can accept, right? Let's go. Are they able to efficiently reduce their overall material cost, manufacturing cost, and all? Let's see. Material cost has been increasing, right? And manufacturing costs also been increasing. They are not efficiently able to manage their costs. I mean, even though they have increased their sale from 1000 to the 3000, but still they are not efficiently able to use the economies of scale because of it, which occurs after if we have lots of production, right? Employee costs also, I mean, they are reducing the salaries, right? I mean, look at this, from 13% to the 11%. They are just efficiently managing the employee cost, right? So yeah, and also other costs they have slightly reduced. So because of this employee cost and this other cost, I think they are efficiently able to manage the two little bit increase their operating profit margin from the 8% to the 10%. Okay. Interest obligation has been increasing. Look like they are now taking more debts. EPS from the 3 rupees to the 11, that is around 400%, right? If I'm not wrong. That's great. Okay. So let's go with the overall. If I talk about the profit and loss statement, they are going doing very well. Not that much very well. We can say yes, they are doing good. Not very. I mean, increasing the sales from the 1000 to 3200, that is around uh, 220%. That's good sign, right? And their overall profit margin is increasing, not that much, but still. And also their net profit from the 57 to 200, that's very good thing, right? Around more than 300%. That's it. So let's go with the balance sheet. That is equity capitals. Okay, looks like there is a little bit sale. Reserves has been increasing exponentially. Not expo. That's good. Borrowings also increasing a little bit. Let's see, is it for the long term or the short term? There is no long term. That's a very good thing. Lease liability. It is a lease liability, so I think there is no concern about that. Okay. Fixed assets. As I told you that the depreciation has been increasing. The reason behind that is they are now acquiring more assets. Look at this. Their land and building has been increasing. Plant and machinery also increasing. That's a very good thing. They are expanding their business. Okay. So accumulated depreciation also. There is also a current capital working process been here. Look at this. 43 cost to the 18 crores. Investment. They are also started doing too much investment. Look at this. That's very good thing for the company. Okay. They are doing overall good as per the balance sheet. Now let's go with the ratios. Debtor days. Look at this. It is a very good thing. I mean, now the debtor days is been reduced. I mean, now the people who are taking the goods in the credit, they are taking less time to repay the company. Okay. Inventory days. Now inventory days has been also decreasing. That's a very excellent sign for the company. Now the inventory in the go down is been reduced. I mean, they are not just stuck in the go down. Days payable also been reduced here. I mean, it should increase. And look at here, it is increased. So overall, the cash conversion cycle is only 12 days. So overall, their net working capital, that is current assets minus current liabilities, is reduced. Means their net working capital is stuck in the business for only 12 days. From compare it with the past, that is they have to hold their net working capital for the 130 days to the 12 days. Look at this, very good sign. They have excellently done this. Look at this. Gradually, they have reduced it from the 136 to the 12 only. That's a very good sign. So now let's check the shareholding pattern. If we look at this, promoter holding has been stagnant. We can say slightly decreased. FII is holding also not from here. Look at this. It was all-time high FII holding, but slightly it has been reduced. Look at this. But again, they started buying here. DIs. DIs also increased initially their stake, but recently they have look at this, have reduced their stake. So overall public stake has been initially they were also having a high stake, but now their stake has been reduced. But overall, if I would say, this is a good company. I mean, look at this cash conversion ratios. They are doing very well here, and cash flow. Okay, oh sorry for that. I have forgot to check the cash flows. Okay, if the company really generating cash or just making a credit sale. So if let's compare it the 163, oh sorry, 162 or 42 around, we can say that 200 crores and 200 600 crores, 200 and 200, that is 400 crores within 3 years. Okay, let's see what's the company profit before tax here. 336 and 900 crores around, we can say, or we can say around 9, around 1000 crores. Okay, so within one for they have done a sale of the 1000 crore but have generated around the 600 crores of cash. So it is basically they are efficiently able to collect the 60% of the gas. So I think it is not that much concerning if they are doing well. I mean, look at this, their debtor days in many reducing means they are efficiently able to collect the cash within 60 days. So it is not that much a concern, right? So we have to, but look at this, I mean, it should around 70%, but that is cash from the operating ability should be 70%. But I think the all the capital is been utilized in the purchasing for the like assets and all. So yeah, if you are planning to invest in there, it is, I think it is a good company for the long term, right? But you have to keep a track for this company's overall cash conversion and cash collecting ability. If they are really doing sales on a cash basis, and if they are efficiently able to collect the cash or not. Till now, they are doing very well. So thanks for the watching. Have a nice day.